All right, everybody, with the market catching a little bit of a bid, I'm talking about the equity market. And the equity market is actually unchanged, actually down $1 right now. But you can see here I made a high all the way up to 68.83, a low, well, it's about 10 handles from where we are right now. A little complacent, but over the last couple of weeks, last couple of days, we've had a nice rally in the market, but with some big two-sided action. A sneaky little thing is going on in gold right now with the market. Now, gold had been following the market. Gold selling off significantly right now, down almost 1.5%, with the market really not selling off yet. Maybe gold's a precursor of the market selling off, or maybe gold is following Bitcoin, or the opposite of Bitcoin, because Bitcoin's up almost $5,000 today. Gold yesterday had a rally. Now today it's selling off. Gold is a little interesting to me, but I don't want to trade /GC. I want to get much smaller and go into GLD. Look at GLD down $5.46. It was just down around $6 a moment ago, but you can see same type of movement in GLD that you would get in /GC, because it is the same thing, just a much smaller product. IV rank of 45 is good. It's had a higher IV rank, but it's had a significantly lower IV rank for most of its existence. I like this gold IV rank. I think it warrants a trade. You look at GLD for the last 5 days, and look at this volatility unchanged over the last 5 days, even though the products had some big move. The IVX 5-day change is what all these products' volatility is doing over the last 5 days. And you can see pretty much all of them are going lower and significantly lower, but gold staying complacent. So I'm going to do, when I'm kind of at a loss for a trade, I don't know if I'm bullish or bearish on GLD. Everybody seems to be bullish on GLD. I'm going to lean that way also, but I'm going to do it with my classic omnidirectional 1x2 put ratio spread. I just love the put ratio spread for its high probability of success and relatively big win margin. Where am I going to go? I usually go to around the 25-ish delta. I'm going to go even lower. I'm going to buy around the 1 standard deviation. I'm going to buy the 362 put. I'm buying that one time. You can see the markets are fairly good here, about 5 or 6 cents wide. And I'm going to sell two puts that are $5 away. I'm going to sell the 357 puts. There's a 1x2 put ratio spread. I actually got filled at $1.11 on this spread. I'm buying one of the 362 puts. I'm selling 2 of the 357 puts. Here's a standard deviation line. This is where the implied volatility is showing you that the extreme move in gold over the next 45 days, because 45 days is optimal for putting on premium selling trades that have high implied volatility. IV rank of 45 is high. This is the 1 standard deviation line. Look at my break even. This green line shows my win ratio, where I still make money. I still make money all the way down to 351. Now, if you want to take on more risk and collect more credit, you can move this closer. You could certainly move your long higher if you want to. I'm going to stay pretty much at around a 90% pop on this trade. I've got $5 in theta decay that I make per day for taking on my risk. My risk in a portfolio margin account is around $2,500. On a regular margin account, it would be about $5,000. That's the beauty of a portfolio margin account as opposed to a regular margin account. You typically use less buying power for the same trades that you put on. This has long 9 deltas because I wanted to be omnidirectional, slightly long. I did it at $1.11. The chances on making 50% on this is around 94%. Good probability of making 50%. The max profit on this, which is really a lot more than what you see on the screen than $1.11 credit that I received, it's $6.11. Why? Because at expiration, right at 357, and that's a lot to ask for, that you pin the short strike at expiration 45 days away. This 162, 157 call spread that I have on 1x2, I'm short 357 puts. The 357 puts would be worth 0. The 362 puts would be worth $5. $5 plus the 111 credit I received is that $611. What's reasonable for me? What's another thing you can do on this trade? Well, if the stock were to rally, since you have these long 9 deltas, and the stock rallies, you could certainly sell another 1/2 call ratio spread and make this like a iron condor on steroids. Let's just use for an example. Let me click off this strike here for a moment. I'm sorry. Let's just use for an example, because people always ask, what can I do? This would be a offensive roll. Saying the stock rallies 5 or 6 handles, let's just use this one. I buy the 115 puts one time, and I sell 2 of the 420 puts. I buy 1 of the 415 puts. I sell 2 of the 420 puts. I buy 1, sell 2, buying 1, selling 2. Of this spread. Now what I'm doing is I'm collecting more credit, not using any more buying power on this trade either. So it's something that you can do, something that you could bring in some delta as a stock rallied if you want to play both sides. For me right now, I'm just going to play it from the long side. You are naked short a put in here. So another thing that you could do to defend this trade is just by selling a naked call. That would pick up a lot more deltas than doing the 1/2 that I just showed you. All right, everybody, that's my trades for today. An omnidirectional, slightly bullish, 1/2 put ratio spread in gold with high implied volatility. What do I need you to do now? You know, I always ask you at the end of my videos to please open, move, transfer, bring your account to Tastytrade, the #1 brokerage firm in the whole galaxy, so we can keep all of this content at Tasty Live for you free in perpetuity.